That always makes you nod your head, doesn't it, Slavic? Just kind of a little head nod, a little bounce. Kind of a cool tune. Slavic, welcome.
Always.
Welcome,
Always.
my
Thank you. Welcome, guys. Hello,
Yeah, how you
everybody.
doing, brother? We got Cody, we got Slavic, we got Tim here. Tackle Trading's halftime report. Let's rock and roll here. S&P 500 is kind of meandering here. 3006. It was up, it was down, it was back and forth. We've had volatility on the intraday, Slavic. A lot of good entries for day trading here today, in my opinion. Slavic, what are you seeing in the market here this morning?
Well, I was doing my thing. I shorted PayPal, first candle off of 2 minute. And what was this other guy's name? NEM. NEM was untradeable for an entry reaction trade. But after the first leg down, I found me a first retracement. You always get in on first retracements when you day trade, and that was the winner.
I see. So when it rallies back, red candle, pivot, confirmation, here we are on the 15-minute candle. What time frame do you prefer, Slavic?
You'd have to keep up with me. You'd have to dial into 2-minute chart off of 2 minutes.
I got you, Slavic.
By the time it bottomed, I already counted my beaners.
I see.
So where was your swing then?
Not after that first red leg down. Right here, yeah, that retracement to the upside in that topping tail. I called it short. It was less than 20 cents worth of risk. And the trade became about 2-1 for me, and then I exited a little bit early, but the trade would be about 3-4-1 if you stayed the whole swing.
Listen, I mean, day trading is one style of trading I prefer. I like it in a lot of different ways, especially for your margin in your trading account if you have those skill sets. And Slavic, you're a fantastic day trader. It's one of the reasons why I love that you're now, in addition to our team here, as one of the coaches at Tackle Trading. And it's a different mindset, isn't it? I mean, by the time you get to the halftime report, pretty much most of your day trading is done, isn't it? 12:30?
Listen, I made my money. I walked my dog, and I did the laundry. All the way up to halftime report.
Beautiful. It's a beautiful morning. There's no doubt about it. Different styles. Back on the S&P here for a minute, Cody. I want you to do a full review kind of the overall technicals. First off, let's start with the long-term weekly charts. Talk about the big picture because we're going to be doing the scouting reports this weekend. Markets are still bullish. I mean, we have a green candle on the week. We're above resistance. We're near an all-time high. Let's not get worked up too much about the intraday. We will talk about the risk of what I'm seeing right now. But Cody, give me a look at that long-term chart. What are you seeing right there?
Seeing a bullish trend to the upside that, petered off a little bit, came neutral. And now what I'm seeing is right on top of these old highs is where the S&P is hanging out. So this is setting up kind of as a high base type pattern on the weekly chart. We can get some confirmation to the upside. It should move off technical.
Yeah. Down to the daily, if you will, now. So the weekly candlesticks are pretty clean, right? Daily candlesticks right now aren't as clean. You've got some pivot relationships with momentum kind of rolling in. Slavic, how much does top-down analysis impact the way that you approach any given morning in the market? Do you look at the S&P first? I mean, what's your approach?
Yeah, I always look at them. I look at all four of them: S&P, NASDAQ, Russell, and Diamonds. And I see some slowing down, potentially rounded top forming here. I'm not sure if we're at the top yet. There is no confirmation whatsoever, but this is one of my favorite patterns. If it breaks, let's say to the downside, for aggressive shorts. I look at all indexes every morning.
Yeah, me as well. Looking at some of the S&P overall performance, now down to an intraday chart, if you will, Cody. And there was some interesting back and forth on the futures market here this morning. We initially gapped open. It looked like the market wanted to buy the cash open, green candle on the first hour of trading, and then instantly red, bringing it back down. Now we're sitting on a support zone. We're now 2-3 hours into the market day. Can support hold at 3,000? That will be the question throughout the day. 3,005 has kind of got some tails in there as well. I mean, obviously, a lot of the volatility is already kind of shook out. We'll talk about individual company news. Now down to like even a 2 or a 5 minute chart, Cody. Either one would be fine. And I'm looking at a breakdown here on the intraday. Now, Slavic, you prefer your day trades early in the morning. I think there's an opportunity to educate right now because that's a breakdown, right?
Yeah.
But
Yeah, it's a breakdown. If you didn't get it, no worries. You can always get in on the retest. So wait for price action to the upside. Observe those candles if they're smaller than the red ones to the downside. Look for just like this guy, whatever it was, the AZ, not AZN, NEM. The same story. Watch those candles. If you flip back to this NEM stock, look how big the candles were to the downside when it was falling apart, and how small the candles to the upside. Yeah, based on that, you can measure and judge that this retracement is shortable. So if the same thing happens with Spider here or S&P 500, big candle on volume, if it follows through to the downside with big candles, observe those green candles. If they're smaller, if the volume is decreasing, and go for a kill with an entry.
Kill. I like it. Go for kill. I like that as well.
We're market assassins. We always go for the kill.
There's no doubt. Do not apologize about making money in the market. Dow Jones, S&P, Russell, NASDAQ, they're all kind of fading here on the intraday. We're going to talk about each one of them one at a time. YM contract, I'm seeing it at support here, Cody. Move on to the NQ real quick. Then we're going to get down to individual companies. Still one of the stronger ones, in my opinion. I know you've got a red inside candle, and some of the weakness today is in the companies like Tesla, which we'll talk about. So some tech names did not exactly come through with solid earnings, but I mean, Facebook and Google and Amazon tonight, Facebook last night, we still got a lot to do here, and Apple next week. NQ, then the Russell real quick, last one. We'll look at all the indexes together. And I'm seeing neutral here, a red candle back inside into the middle. Which of the four indexes do you guys see as the strongest right now? Cody, I'm going to start with you.
The strongest right now, I would actually say the S&P. The main one that we look at. I like the S&P over the rest. The Russell 2000, I'm seeing neutrality. The NASDAQ's got a lot of the tech strength in it, so I could see an argument there. But when it comes to, being well-rounded and weighted, I like the S&P over the rest of the indexes.
Slavik?
Yeah, S&P. Russell is seasonally down to sideways, right, during the summertime. So that's kind of expected. But S&P, the strongest for me.
I'm still interested most in the NASDAQ. I think the tech names can give leadership if the market comes through earnings the way that I'm seeing it come through earnings. I know today we got a red candlestick, but in general, most companies are beating right now. We are seeing mostly good news and reactions to that. We're only about 25% through earnings season, so it's not like we're anywhere near done here, but I still see some upside on the NASDAQ. We'll keep breaking these names down one at a time. When I look at the heat map, Cody, many things jump out. Number one, Bristol Myers Squibb, BMY, brightest green box on the S&P 500, and earnings bringing it off the bottom. Not going to get too worked up about that. Raytheon, RTN, is also on that heat map, very green. Let's bring up some of the good ones here. Breaking out, showing me some strength on earnings. I like that. And I like some of these industrial, aerospace, and defense companies right now. Bring up NOC real quick. We talked about this one yesterday, guys. What a juggernaut right now. Kind of feels like a miss to me, obviously. You're not going to chase that candle as a swing trader right here. But bullish. Cody, do you got this one on a watch list?
Oh, I've had this on a watch list for quite a while. Yep. I mean, when you see this uptrend throughout the year, those always end up catching my eye when they're just fading to the upside. It's like, okay, wait for that opportunity. There are some that will never give me an opportunity to enter, and I'm just like watching them fade up, and I'm like, oh, but like this guy, he gave me an opportunity right there.
Yeah, and there's a lot more green. I like UPS. I like Norfolk Southern. We talked about some of those yesterday. Netflix actually bouncing back on a bear retracement, but some of the red here.
Watch this right now. Speaking of which, because
don't you love it?
I am looking for a doji on this thing. If I get a doji right up here towards this 330 or even where it's at right now.
Yep.
Oh, Netflix is going to take some hurt from me.
Oh, there was quick momentum on Friday and Monday and Tuesday to the downside. Now we're snapping back here again, but that's just a bear retracement back into or near the 200. Yeah. And
I plan on paying for my Netflix subscription for the next 7 years.
Lock it up. Yeah. Prepay it. Slavik, let me ask you a question on gap fills. Okay. Where do you draw the old gap point? Is it going to be from the actual gap on the candlestick day before earnings, or are we going to be looking at the old support here at 340?
I would look at candles, individual candles, and if it gaps, below the candle and stuff like that, I will look for short or long, or above candles for long. Right here for Netflix, I'm interested in short because like I was telling everybody in the lounge and everything everywhere else that Netflix broke its expected move to the downside, and there will be shorting opportunities throughout the quarter, in my opinion. I'm looking to get in potentially below 320 today if it comes back, or at that gap edge 330, or even at 336, where that, what is it, 200 moving average, the green line?
Green is a 200.
Yeah, even there, if
your 200 is not green, you're wrong.
Mine is always red.
You're wrong.
I've always had the 200 as green myself, but I don't know why. I mean, my first teacher told me that. By the way, the reason why yours is green is because the domino effect, Cody. Matt and I were taught that way, and then you were taught that way, and so there's no other reason. Maybe we should just make them red, and let's just follow Slavic around. I got no problem with that. We could easily just make up our own rules, Cody. The 200 could be pink. Why don't we just make it pink?
No, my 100 is pink.
Gotcha. See, you got to have that ordered system. There's no doubt about it for your brain. I get it. Netflix coming back here. I'd be interested in a bearish retracement. Let's talk about some of the weak stocks that I'm seeing on the S&P, though. GE down 2.88%. I've been talking about this company. No. I don't have a trade on it right now. It's neutral, and I'm waiting for a breakdown. I'm still have it on a long-term bearish watch list because I do have real concerns about the fundamentals. But in the short term, the trend is neutral. It pays a dividend. I understand why it's holding up. I still think the company is a $5 company, though, personally. But my opinion doesn't matter. Price action matters. Slavic, what are you seeing in that chart right there?
Rounded top from a bigger time perspective. I'm seeing rounded top around this 10:30, 10:50, between 10 and 11. If it keeps on chopping and finally gives, I know for a fact that GE closed bunch of plants in Poland and all over Europe. So that can be a good sign for that company, unless they're restructuring or doing something. But lots of people that were working for GE lost their jobs last year and 2 years ago all over Europe. So
it's been happening globally. They've had a long, hard road here with General Electric. There's no doubt about it. And as the PE ratio dropped, a lot of investors got pulled in thinking, oh, it's a low PE ratio company. It's a good, long-standing company. But when you've got bad fundamentals where you're not making money and your earnings are down and down and down and down, it's not going to recover just because you have a low PE ratio. There's a lesson there, I think, with GE. And then the other one that's grabbing my eye here on the red side here, Cody, is Boeing. And man, I'll tell you, this company is just dropping like a rock, 3.6%. Post earnings, we sold off. Now we sold. I know it's got support down here at 340, but they've got risk here, guys. I mean, there's no question about it. Slavic, give me a read on that chart.
Short term, a little overdone here. If you put Fibonacci's on, you might be right at the target. 127 extension to the downside.
You want a fib extension?
I have a specific way to draw the Fibonacci's, but the length of this green leg, that's usually your first target. We're failing at 200 moving average. We're breaking the pivot on the daily and building a low base on intraday. So who knows? Maybe today is the day for Boeing to break down through that 350 and stay below. We'll see. Yeah.
Lots going on here across the S&P 500. Let's move on to the dollar here next, Cody. $ DXY, if you will. And Cody, the ECB came out this morning, and at some point you'll come down to the euro-dollar cross pair, analyze the index first, and kind of give us an update on what happened with that ECB meeting.
Well, they pretty much decided they were going to continue with their easing type mindset, and they are looking to actually start implementing easing policies come September, which tells us they're either going to be adding money to the system or they're going to be moving to negative interest rates, both of which are a extremely dovish modern monetary policy type mindset. I don't disagree with it, but if they're going to do that over in Europe, then that would actually comparatively add strength to the dollar, because if the dollar is holding an interest rate that is positive versus interest rates that go negative or over systems that are adding inflation to their system, then it's the least ugly of the bunch. And the dollar's been like that for a while. So as the euro starts moving that direction, even if we start lowering interest rates, if we still hold positive interest rates over their negative ones and in a strong economy, then the dollar should actually hang out, because rather than it continue to move up in this bullish trend that we've had all year long, where we were raising rates, but other banks were keeping their rates the same. So that's where we were adding strength against those currencies. If we're lowering interest rates, but they're also lowering, then they're going to counterbalance each other. So we might see this thing end up getting stuck back in the range that we had, last year, where it's just going to bounce around between probably. Oh, come on, draw a line. Oh, looks like I'm going to draw a fib. Right in there in this range, we might get stuck versus having that upper momentum. So right now, the dollar's going to probably maintain neutrality, just as we're hearing these different things out of these different countries. To look at the dollar compared to the euro, you can kind of see it looks inverted. There's a lot of noisy move down there. I think we'll see more movement in September when they show us their hand. What are they going to do? Because right now it's still just talk and speculation as to how they're going to adjust policy.
We got big changes in the ECB over time, as Draghi is going to be moving out, and obviously not Theresa May, I keep saying that. What is her name? Christine Lagarde is coming in, one of the bankers over there in Europe, and that transition over the next 6 months will be interesting to watch as well. I think a lot of this is that everybody's waiting on the Fed next week, right? I mean, until we get the Fed announcement next week, whatever the ECB has to say, I don't think is as important as the Federal Reserve. Correct?
We do. Yeah. Oh, absolutely. The Fed takes precedent over just about any other meeting. That includes, for some other countries, the Fed can really affect. And actually, before I forget, we have advanced GDP tomorrow. So we got to keep an eye on that one, because so there's 3 different GDPs that always come out: the advanced, preliminary, and the final. Mm-hmm. The advance is the one that holds the most weight. So we got to keep an eye on that one tomorrow, because that could also move the dollar and the markets.
Yep, I agree. As currency markets move, obviously always commodity markets are going to move as well. Let's go through crude oil, gold, silver, Bitcoin, the ones we always kind of look at. Crude light's stuck in the middle here, guys. I think it's a cash flow candidate. I like condors. I like options. I like things deep out of the money, whether it's going to be through a spread on the bull put or the bear call, something like that. In the short-term directional nature, I'm not seeing a lot from crude oil. It's kind of stuck in the mud. Pattern's a little bit weird here, because you had a tight range late June, early July, and then you had an expanding range, Slavic, where you actually failed on a breakout to the upside. You failed on a breakout to the downside. When you see 2 failed breaks, what does that tell you about the chart?
Well, we're weakening here against that resistance at 60. That from May, that support became new resistance. We banged our heads. We are printing a nice little retracement that could break down. I see head and shoulders here on that chart, short term, and if we break that 56 area, I would look at 50, the next area of support.
Mm-hmm. Yeah, I'm kind of looking at that as well. In fact, Mark and I were debating, or discussing, I should say, not really a debate, about what we see in this chart. And I think the next stopping point would be 50 if we break that support point, in my opinion. Cody, what's your read on crude oil?
Lots of neutrality.
Yeah.
There's too much argument going on. There's political risk, as well as just the technicals show just this neutral wedge pattern. Actually, it's huge. Fed back all the way out. Stop drawing fibs, Cody. That until we see a break somewhere of this thing, it could go either way.
Mm-hmm. Yeah, I agree with that. No doubt about it. Move on to gold, then silver. Let's look at the metals markets, and holding, hanging around. You can't like the candlestick. It's not a strong one. It actually looked pretty good at one point today when it was wanting to go higher, but that's why you get a full day candle before you start to judge what it does mean. Here, we got to look at the intraday action here on gold, obviously.
Well, I was saying this as Slavic was analyzing that trade on Newmont. I was like, I can only imagine what gold's doing if Newmont took that kind of move.
Yeah,
exactly.
Tried to break out in the morning here, Slavic, in the overnight session in Europe. You saw some green candles appreciating, and then boom, drop throughout the evening into the cash open. Now here we are, middle of the day in the U.S., and we're down.
That's an intraday trade right there.
And right there, just like that S&P. And if you look at Spider right now on 2 minute, it's just triggering a short-term short opportunity to the downside. Do we have the same thing? Put it on 2 minute chart. That's what I was talking about. Look and measure that retracement halfway through the drop. Candles are smaller, and I have completely different looking chart here for some reason.
On SPY?
SPY, yeah. What do you see there, Tim? You have the same thing?
2 minute chart, 1 day long.
Yeah, I'm seeing the same thing.
Should be the same.
I have a different chart here. I don't know.
Are you on SPY?
Am I on SPY? Yeah, I am on SPY.
Are you on Newmont Mining or something?
Speaking of NEM, it was based off of the gold price action. I mean, they were. I was watching gold. I was watching gold in pre-market, and this NEM popped out, and I took it. I was,
It looks like you're about to get a retracement. Take it again.
Yeah. So look at that one, 1416. Look for failure there, some kind of fail candle or formation, some kind of green bar ignored at that resistance, and just take a trade. Next target, the previous low.
Mm-hmm. Yeah, on the intraday, it is not looking strong here on a Thursday, 7/25/2019 for gold.
Thank you, Fortino, for pointing that out. I'm on delayed data, Slavic.
That's why.
Yeah. So I'll have to adjust that. But
by the way, it's a good lesson here. Contact Think or Swim. Your paper accounts aren't necessarily automatically set to live data. Mm-hmm. So you might be trading in your live account like right before the halftime report. Be like, okay, we got to go live. I'm going to drop my live account, bring up my paper account. But they might have you on delayed data on accident. You never know. They don't want to turn it on live because it costs them money. But they will, even if before you live trade, most brokers will turn you on live data. So if you're out there, you're a brand new trader, there's a lesson right there for you. Contact Think or Swim. No big deal. C'est la vie, kiddo. Let's keep
I didn't even realize, because I actually have the ability to put this to live data. I just didn't even.
Go ahead.
If you are trading like, any amounts of trades per year with Thinkorswim, and you still have deleted data, they will have no problem making it live for you in your simulator, because you're spending money with them for commissions, right?
Yeah, that's right. That's exactly right. All right, guys, let's move on back to the daily chart. Get it off the intraday because that'll smooth out some of that delayed data for you there, Cody. And take a look at silver. Gold, red candle, silver, going to be a red candle as well, kind of giving some of that up, but a very different pattern, obviously. You've had green, 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 green. Now, this is an inside candle. We've not given the whole thing. In my opinion, a weak candle, not what you want to see if you are a bull trader on silver. But until it violates the low of the previous candle, Slavic, it doesn't really hit a rule for me from a swing trading perspective. I like the trend. I like the blast off move. I understand it's overstretched. What are you seeing up here?
Well, first of all, we're very overstretched on the daily, weekly, however you slice it. We're very overstretched here, and just like with gold's breakout, I would wait for moving averages to catch up with this price action, whether it's going to be a retracement or a high base, and moving averages just will follow the price action, and look for entries long, because this is a beast in my opinion.
It's been a beast. I mean, it is literally one of the strongest areas of the market in the last couple of weeks alone, just kind of taken off and running. All the metals seem to be down here today. Platinum's down, copper's down, palladium's down as well. One quick look at Bitcoin here, if you will, Cody.
Do we have to? I'm kidding.
We do. Well, I think so. It's hanging around 10,000. Very complex pattern on the daily chart. Back out to...
It's finally holding
trying
technicals. So if it stays above that 20, actually, that's my 50 right now. This is wrong color. So anyways, if this were to hold that 50, which is where it's trying to hold, then I mean, it should stay up, but if it does break that, I mean, you and Mark talked about it yesterday. This is a big moving average pocket that it can fall down to.
Mm-hmm. Mm-hmm. Yeah, I agree. If you do violate below that 9,000 level and the moving average, you've got a lot of room to the downside. There's no doubt about it. I still think it's the same it's been for a month, which is crazy, unpredictable, and let's see what happens. There's no doubt. I need more data. I need more trend. I need more clarification from that perspective. It's not a good swing trading vehicle. A lot of traders do day trade it right now. There are a lot of people who are day trading crypto. Slavic, you ever day traded crypto?
Oh, hell no, never. I would never. I would remember my comments when you were talking about Bitcoin the other time. I would be crying dead with 4 strokes and 7 heart attacks. However, in Bitcoin, I see fallen wedge, and within that fallen wedge, I see symmetrical triangle. And if you would twisted my arm to guess which way it would go, I would guess it would go towards the direction of the trend. So keep your fingers crossed, because it might just pop over that little trend line for over five days. What is it? 1, 2, 3, 4, 5 days candles worth of candles. Yeah, if it pops, I think see the 13,000 test.
Hero in the chat.
A good point, Hero. The guy who day trades on 2-minute charts says hell no to Bitcoin. That tells you a lot about cryptocurrency. I think that's pretty funny observation, actually. Loving it. All right, let's keep moving through here. And, there are a few companies we got to talk about before we go into rapid fire. Facebook, Tesla, Amazon, Boeing, Netflix. We already looked at Netflix. Give me a quick look at Facebook from their earnings reaction, Cody, if you will. I thought the report was good. I read it and I reviewed it and I saw the news, and I thought Facebook was going to have a much better reaction to it, and it did not. The initial burst, go down to an hourly chart, Cody.
We're just tearing up the intradays today, aren't we?
Yeah, it did try to gap out this morning, and last night on the reaction to Facebook, it started to move higher, but then it gave all of it back. When you have a failed breakout, Slavic, what is that telling you about the price action and the traders and the psychology around a chart?
Well, if you first, my analysis usually start off the daily chart, and if you look at the year worth of data here, there was exactly what we stopped, exactly to the penny, 208.50 or so. There's that little resistance, or maybe a little over than a year, little resistance. There's that little pivot that we stopped right there, and I hesitated because I thought that this pivot will be so small that we will, right here. It was so small that it will not stop that price action to the upside, and it did. And that's the power of the day trading and reading the charts. We were right in resistance. We gapped up. I was thinking, over that 208.50. That I will take that trade long, because I love Facebook to the upside, because I know that the hedge funds and all the managers buy it in the morning. And today was a different story, and that was that resistance looking from a year ago or so, a little over a year ago, when it was printing the highs. Yeah,
I agree. And I still will be interested in Facebook if it does break and run. But right now, kind of concerned on the short term. Give me PayPal, if you will, Cody, as well. One of my favorite companies, and one of everybody's favorite companies. We've had PayPal on so many watch lists. And here's another good reminder. Check your earnings dates. We've all done it. I'm guilty of it too. Over the course of 14-year career, I've made the mistake as well, where you hold a company through earnings that you didn't intend to. But man, you can avoid that. You can prevent it. You can plan it. You can double check those things. PayPal did gap down about 4.5% on earnings. Now I'm interested now.
I was going to say, I like this gap down. This gap down with the long.
I wouldn't. I might buy the break back out of the gap, but I would not just buy the gap on the candle alone.
Oh, I'm not going to buy the gap on the candle alone. My immediate thought is I want to see what this reaction was, to see what that wick does. But then I might actually buy if we get above today's highs to the upside, and that I can buy, because this interests me. To me, this tells me that I can look to pick up PayPal for probably about 3.5% cheaper.
Mm-hmm. And all is right with the world when I see Tesla down 14%, TSLA, if you will.
I had the same thought this morning.
Yeah, but now it's a mess from a chart perspective. Here's a candidate, guys, where actually, and this is going to be an advanced technique, and obviously if you know how to do this kind of stuff, just here's an idea. Post earnings gap back into a volatility range, sell an iron condor, okay? Because you still have some volatility at a high point that's going to fade over the next little bit. You've got a neutral condition because Slavic, and maybe I'm wrong, give me a read on this chart, but I'll tell you, my instinct is it's a coin flip for 5% up, 5% down here, which kind of leaves me to a neutral chart reading. What do you see on a chart like that when you see a gap down into a range?
Yeah, like I said, I can't make it on time since my wife is still on vacation in Poland, and I didn't have a chance to look at the expected move for Tesla in pre-market, but I would imagine it was right there. So I would say neutral, 230 support. And speaking of PayPal, I killed PayPal this morning. First candle, 2 minute. Then I added in the green candle, and I cut the bottom. And I could have been done for the day, but I wasn't satisfied with the profit, so I looked for that NEM. But speaking of Tesla is I see a lot of support here at 230 from this come up and that pivot from May. Yeah, we might pause here for a little bit.
And Ryan, it's a good point. Maybe I should not punch down here and beat up on Tesla when it's down 14%. He says, after seeing Tesla fall, all I thought was how bad will Tim bash on it? I'm going to let this one go. I think a neutral strategy here, Ryan, some way to trade off of that volatility. By the way, the MMM projection, Slavic, if I have my numbers right,
you never pull back as an assassin. If you have your goal and you see the kill, you take it.
Okay. The kill is going to be selling the volatility and letting other people try to figure out what direction this mess is going to go.
I agree. I'm just picking on you.
I'm with you, dude. I like it. Other stocks that are grabbing my attention, well, there's a lot, but let's talk about Budweiser here. Bud pre-market today gapped out. Anheuser-Busch beer companies, all's right with the world. Maybe they're going to make a catch up to, Beyond Meat as it's been running like crazy. We'll have a beer and a fake hot dog, I guess. I like the earnings report here. I hate the candlestick up there. It is not a tradable candidate because it trades so much internationally. They're not necessarily just American company anymore, but that one was strong. Other things that we've got to talk about. Well, Amazon tonight. Bring that one up here, Cody, if you will. What's the MMM on this one, Cody? Show people how to look that up. There we are.
So MMM, simply go over to the trade tab, and it's right here. So the MMM on that is $70.26. So from where it's at, let's see, 19 is going to put us down here.
3.5%. 3.5% on a stock this size is about standard. I mean, that's what Apple's MMM is usually, Slavic. It doesn't really exceed that. What's your expectation for Amazon coming into all this?
I expect it to open tomorrow, and if it meet my requirements for trading it after earnings, I will. Either way.
I love that answer so much. I expect that tomorrow the markets will be open, and whatever the information is, I will then trade off of that information. That's a great answer. Amazon earnings tonight, 3.5% gap projection. Google, here, Cody, give me a look at Alphabet. God, you got the 27 Yankees tomorrow here, guys. Alphabet, Amazon, AB InBev, Intel, Comcast, Starbucks, Southwest Airlines. You have a huge slew of earnings coming out tomorrow morning. Google's MMM, I would guess a little bit higher here than Amazon is my expectation.
Let's see.
From a percentage perspective.
I think you'd be right doing rough math in my head. They're pretty close though.
46 on 1100. We're talking about 4%. So just a little bit more. They expect more volatility there. Got to keep an eye on it. There's no doubt about it. All right, guys, we're at that point in our show where it's rapid fire time. We're just going to take a look at the companies that you want us to. We're having fun here on a Thursday, working through the markets. And while those companies come in, let's take a look at the ES. Man, this 3,000 level on the S&P 500 on the intraday here, Slavic, is going to be very, very important. That bear retracement was perfect. The breakdown at 3,005 dropped a little 5-point run. It's going to be fun here. All right. Okay, Steve, Cyber, Sin, Jacobs, Goldman Sachs, Slavic, you're first. Give me a read on the chart.
For Goldman.
Yep.
Yeah, nice pop out of this base, pulling back some. Look for re-entries or just live through that pullback and wait for higher prices. That's my read.
Yeah, Steve, there's a lot.
I'm going to add to that read and just say that this was on the stock or the options report, excuse me. And the first target was 220. Mm-hmm. So when you popped through that yesterday, you should have taken some of your profits because the market gave them to you, or adjusted or scaled out or spread your trade. However you traded it, you should have adjusted yesterday. Today it's breaking down below it. It could be starting that retracement back down. It could be giving you a second entry, which is also why you want to take some profits at the first target. And then you can get back in when it retraces. You can play it to where you're constantly just picking up money out of the market.
Correct. Yeah, there are a lot of different mindsets here. There's another way that you could have thought about this one, because I like the fundamentals in the earnings release. I actually played this one more like a position trade, Cody. And I played leap options on this instead of short-term options. Target one or this red candle have nothing to do with my thinking about how I'm going to approach Goldman Sachs. And whether you play a bull call, a straight call, the stock itself, or you go into leap options.
Does your brother know you're doing a longer in play on Goldman Sachs? You're investing in Goldman Sachs.
They are not the evil empire. Whatever they did in 2008 or 9 has nothing to do with what I'm thinking about with that company. Same thing with Walmart. I used to hate Walmart too. I hated Walmart.
That's right. You did used to hate Walmart.
And now I don't. I think they're one of the best companies. I think
it's one of the best setups in the market right now.
I love the pullback on Walmart. Let's keep moving here. Verizon, Cody, you're up next, then me. We'll keep rotating. We'll just go right to left on my screen.
Verizon, very messy chart, hard to read. Yeah. If you're looking at this as a smaller retracement, I'm going to shoot that down and say, no, this is a messy chart.
Yeah. Hershey, Ime, and Tickbeer. Ime, great.
What's Hershey?
HSY. Oh, man, what a beautiful candle here. It came back down, found the old gap point at 140, tested it, rallied through that on the intraday, and now we're taking out the high. What a great find there, Ime. Bullish, obviously, and a wonderful reaction to the earnings. Target, TGT, Slavic.
High base. Wait for that 90 to clear and go for it. Speaking of changing your mind, I don't know if it was Tim or the person that he was interviewing. We are worse than politicians, right, when it comes to changing our mind on different things.
All the time.
Yeah, there's nothing wrong with changing your look on whatever it was, Walmart. Target, high base, earnings. You can squeeze a trade if it pops.
And actually, really quickly, I'm gonna take that and say the company that I shorted so often, I'm starting to change my mind. And all the students know that I love to short LB just because for the past year or so, it's just been a dog. But it had this W here, came back down $25. Some of our students on Twitter asked me if I was looking to short it. I said only if it closes below 25 because this thing's starting to look like a reversal pattern to me. So I might have to change my mind on my favorite shortable stock.
You should change your mind. If you don't ever change your mind on politics, life, and especially trading and investing, you're not open-minded enough. The market dynamics are going to change. It doesn't matter whether you think that modern monetary theory is the dumbest thing in the history of the planet and the market should crash every year. If it goes up for 10 years in a row and you lose money in a 10-year bull market, you made mistakes. Okay. Be open to that, admit it, and move on and change your ways. This idea that you can't change your mind, I think, is crazy, Slavic. But we get stubborn. We get stuck, don't we? Home Depot, I got this one. I like this stock a lot, and I do like the candle. It's playing defense here today. The market's down. Home Depot's flat, little doji candle. Not much indecision, right, is really what it is. Indecision on that pullback pivot with the market doing well. I got no problem with that. CCL, Carnival Cruise Lines. Slavic, you going to take a cruise to the Mediterranean?
Nah, I traveled there by plane.
Plane.
Carnival, the season will come after vacation when the hurricane season starts. I think it already started, but the time for shorting CCL will be September, October, November. And if you look at seasonality, that's the best. Look at the last year here, what happened.
Zoom back out.
Yeah, see, starting
Nice more time.
starting in October of last year, yeah, it went straight down. Well, it's still, downward
Yeah, you
trending.
can see this one here, right around 8 to 9, right
Yeah,
around there, 9. So yeah, that's
yeah,
a very good point seasonally for this company.
Break below the support though. I don't care what the
yeah.
signal
Nice,
is.
nice low base. Yeah, I agree. But yeah, there will be fun.
That supports a
Fall.
multi-year level of support. So yeah, if it breaks that,
Yeah, I agree. FICO, Cody, you got FICO here.
FICO.
Obviously makes me think of FICO score here, but
That's exactly what makes me think of. Well, that's the weekly chart, and that weekly chart looks pretty intense. Let's see what the daily looks like. It's got a high base on it. So
yeah.
with that high base, even with all the momentum to the upside, if we get a break above that, that's a tradable signal.
Great, 100%. Citigroup, Adib, and this one was a candidate here on this breakout. Red candle coming back in here is going to make a swing trader kind of concerned, I would say. Citigroup, probably not a great directional long call play, in my opinion. Might be a better thing like in a bull call spread or a leap option or even the equity itself. It does pay a nice dividend. Citi and Bank of America and a lot of these banks, they're actually really good covered call stocks for longer term accounts. I don't like the red candle if you're a swing trader, but it is holding the 9 EMA. Kind of a weird failed breakout in there. There's some mixed signals. There's no question about it. You got to execute a trading plan that fits that style right there. Coca-Cola, Slavic.
Nice, nice pullback. A little bit too deep. This topping tail worries me. And well, we can still trade it off of that support of that breakout. But I would love to see Coca-Cola holding this first green candle after earnings and find an entry somewhere there. If not, I would need some kind of form right at that support.
Yep. We got about 5 more here, boys, and always fun here. If you're watching our show right now, you enjoy Tackle Trading's halftime report, give it a thumbs up, share this out there, communicate it with a friend. Hey, tell somebody out there to come and join us live tomorrow on a Friday, fun day. Plan here next, Cody.
Oh, you want me to take this one? Well, what I see is that it does have a nice uptrend going to it, but the last day, the day you should have gotten in would be yesterday. It might not be, a little bit too late today, but I prefer to wait for it to come back down.
Conservative triggers in the step system would have waited till today, because yesterday would not have closed enough ATR above the resistance breakout point to get everybody in. Now, I would have triggered in yesterday, Cody. There's no doubt if I was playing it. But some really conservative traders who do things like position trading, they probably would have waited till today. I bet Mark would have waited till today, actually.
I can see that.
The way he trades.
Let me tell you where Mark would have gotten in.
Just add the EMA.
Yeah, let me just add that thing real quick.
That's a good indicator for old Mark.
Oh, it is. And I actually love the exponential. Ever since using the exponential on the hourly chart when I'm day trading currencies has been one of the most consistent systems. And actually between that and the 2-minute chart, which I got from Slavic, that's where most of my day trading on currencies has thrived.
Just kind of benefited you. Yeah.
So I think Mark, he probably would have, I would debate he might have gotten in yesterday after that bounce off the 9.
Could have. Would have to ask him. XOP, I'll take this next one. XOP, the oil and gas ETF, bear retracement, red candle pressing support. 23.89 is the low point back from December. Guys, I've been bearish on energy in some areas of this sector and definitely these oil and gas XOP stocks. It's an ETF to keep an eye on if you are trading oil, energy, these types of companies. Definitely AYX from Janik and Slavic. You'll take this one.
Sorry, I was typing in the chat message. AYX. Yeah, Johnny said we weren't seeing his chats, but I see him saying, why you guys can't see my chats?
Oh, Johnny, I didn't see the letter V up top. I do see your chat. We'll get to Visa next, Johnny. Yeah.
AYX breaking out. Potential trigger happened today. And did we have it on the report?
AYX, I don't think made any
Probably
reports.
not.
I think with that tail, it had a hard entry.
Tell you.
But yeah, it's triggering long. It's triggering long now, and it's got clear skies right above. I don't know. I would even target 130. Let me see.
130 stands out as a target for me.
You know, real quick tip out there. I always take every candidate from the report and build it into a watch list in my Thinkorswim every week, so I know what's in the bullish and bearish watch list. And I kind of lump all the stock and options ones together because how I trade them, I'll choose what I want to do with them, right? But you can always do that. So AYX did not make our report last week. No, it did not. And let's get Visa. Let's get Johnny back in here. Johnny was a schoolboy. Let's see here. Visa, I love it. You know, obviously PayPal coming back. Payment processing systems are probably under a little bit of pressure today. The market's under pressure. Still love the trend. It's holding the EMA. Kick it to a weekly chart here, Cody. Visa's a trending candidate. You know, we're still green week. We're still up. We're still bullish. I don't see anything that's really going to shake me off of that in a daily candlestick scenario here. And couple more. I just want to make sure if I missed one, come back tomorrow. NKTR from Deeb.
NKTR. I like how you jumped right over Frank's. Deal with it, Frank.
Yeah.
You're a coach. We don't have to analyze your stock.
Frank, sorry, bro.
Right away. That's a nasty break to of a multiple heavy support level. That's a good break. I actually
didn't we have it for like forever on our reports? This NKTR, yeah. I think so. It finally gave up.
Finally did.
That's what happens when they finally do. They're down 10% in one day. C'est la vie. I mean, it is. Yeah. You're waiting. You're hanging. When it's going to happen, then the floodgates just open, and ding, 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 ding. 10% drop in a day. Wow.
And if you missed it, look for retracement.
That's right.
There's nothing wrong with missing that first entry.
Yep, that's right.
That fear of missing out is probably one of the biggest things that gets people is they're like, oh my God, it's moving now. And they'll buy, and it's like, and then it starts retracing, and then it's like, We've all done it. We've all had that moment of like, oh, we got to get in right now. We've all had it. Just be patient. You'll be safer.
Well, and I think what can happen as well there, Cody, and it's where portfolio design is very important. If you're going to day trade, you shouldn't mix your day trading with your retirement money, right?
Yes.
You know, the way that you invest in your growth account is different than how you trade in your Forex account.
I would strongly encourage everybody to open separate account if you are capable of doing it. Because
I not only have separate accounts, I have separate brokers for my different accounts.
Yeah.
Like, just they don't even touch each other. One's open, one's not. Like, because I know Thinkorswim, it has the account switch tool at the top, or you could just go all accounts, and it's like that defeats the purpose.
I agree. In fact, I was talking to a student last night, and I was even giving her some advice. I was like, listen, I mean, your longer term growth accounts, you should think of them more like just investing theory. Now, you're actively managing and making decisions on a regular basis, but you don't want to treat the investing capital the same way that you treat your swing trading capital or your day trading capital or even your volatility trades. Make sure that you're designing a portfolio, and that's where things like cash flow and growth and speculation and all those things come in. Speaking of which, we have an event tonight. It is the Cash Flow Club, and the Cash Flow Club is going to focus on the covered call strategy. In the chat, type in covered call strategy, okay? And Coach Mark is going to be talking about covered calls. And I asked the question in our clubhouse, where do you trade covered calls? And we already started getting quite a few answers in there. For me, a covered call is best, Slavic, in a longer term account. It's not really a short term strategy from a trading perspective. What about you?
I position trade metals, like big names. I'm a swing trader and day trader from nature. But yeah, cover calls, from longer term perspective. If you have that position and it's going, the wrong direction, why not rent it out?
I agree. I agree. Join Mark tonight. If you're a member of our community, great. You should have that link in your email. If you're new and you're not a pro member yet, sign up for a 15-day trial and come and join us. We actually do most of our work here, in the halftime report, just doing daily routine stuff. But all the real, strategy and content and all that kind of stuff is usually in our nightly shows. Great job, Slavic. Great job, Cody. We will see everybody.
Tim.
Thank you, my friend. All right, we'll see you guys back here tomorrow.